Hello and welcome back to the channel, Dennis Bank Trades. So today we are looking at what is Forex trading. This is a complete guide to the Forex market, and we'll be having 20 series that will take you from a beginner to someone who really understands the market. And today is the genesis. Today we are starting at part 1. So stick around. Let's go. So the biggest financial market you've ever traded. Well, this is a very, very big financial market whereby there's a lot of money, close to 7.5 trillion US dollars that is traded every single day. That means that you can actually make any amount of money you can think of if you actually understand the science, these fundamentals, these technicals. If you can actually learn all of it, you can make as much money as possible. So this market is open 24 hours a day, 5 days a week. That's Monday to Friday, no market close. So that means that there is no excuse. You can do it anytime you feel like. It's open. Like there are many sessions. And so meaning if you are a student, you are a part-time worker, full-time on your 9 to 5, anything, you can actually trade this Forex market. So there are around 170 plus pairs, currency pairs. You can trade gold, you can trade anything. So basically this is for you. There are many pairs, and according to your personality, you can always choose what you want. So what is exactly Forex? So Forex goes way back, even from the days of the old books in the Bible. It's just exchange. Like it goes back to the beginning of money, whereby we started by exchanging, by barter trade. You exchange something in exchange for another thing, whereby you're thinking that they have the same value. So Forex is the act of converting one currency into another. So I'm sure that you've ever been, maybe you've traveled to another country whereby you have to change your money that you're having into, like, let's say you have your local, let's say you have pounds and you want to change them to Forex. That is already, you want to change them to the US dollar. So that is exactly Forex, like you're exchanging. So in trading, we profit from the changes in the exchange rate between the two currencies. So in basics, let's say you're exchanging, you want to exchange into US dollars, but you want to get a lower value so that when you exchange to the dollar, you get a higher amount of money. So it's about buying the dollar low and selling it high. So we profit from the changes in the exchange rate between the two currencies. So the example is that you buy Euro USD when you believe the euro will strengthen against the dollar. So when it does, obviously you will sell at a higher price and pocket the difference. So you buy one at a lower price, you hold it for a given duration of time, then actually when you see that its value has increased, you can sell it. So that is Forex. So that is like the simplest format of Forex you can know. You can actually relate it to maybe a gadget. Let's say like you buy an iPhone. Let's say you buy an iPhone at let's say $100. So you hold it, keeping depreciation aside. You hold it for a while, and then maybe when it's scarce in the Apple Store and all that, you know that there's demand and all that, so you can sell it at actually a higher price than that. So in Forex, what we are exchanging or what we are trading in, it's actually currency pairs. So every Forex trade involves two currencies rather. Every Forex trade involves two currencies, and that makes it a pair. That's why you call it a pair. So we have a base currency. So and for this example, we'll look at Euro USD. So this is the most traded, like it has the most volume. Yeah, there are many people trade it. Yeah, so when you look at Euro USD pair, that means that there is a euro and there is a dollar. You get. So actually, on the left, the euro is called a base currency. You get. So it's what you're buying or selling. Then on the right, we would have a quote currency, which is the dollar. You get. So it's what you're paying with for that transaction. So an example here, if Euro USD is 1.1, 1 euro buys 1.1 US dollars. You get. So now if the rate rises to 1.11, you get, and you bought earlier, you profit on the difference. So as we had said, you buy something, you buy a commodity in anticipation that the price would rise, and then you would sell when it's high. So let's say you buy it at 1.1 in anticipation that it's going to rise. Then when it rises to 1.11, you've made profits. So that is the whole business, because Forex is a business and we're anticipating to make money. You get. So the major pairs, because here we have major pairs, and they are major pairs because they have a lot of volume. Many people are trading it around the world. Yeah. So the major pairs are Euro USD, GBP USD, USD JPY. And these are the most liquid and beginner friendly. So as you can see, it's called a pair because you can see it's a combination of two currencies. So Euro USD, it's the euro and the dollar. And GBP USD, it's the British pound and the US dollar. You get. And then you have the USD Japan, which stands for USD dollar, the US dollar, and the Japanese yen. So these are the most liquid and beginner friendly. Why? Because these are traded by many people. So there's a lot of money in those pairs that many people are exchanging at the moment. So that means that the spreads will be low in these pairs. You get. So I think later on we'll look at a spread in the next video. You have to really keep in touch. But to make it easy, is that when the spreads are good, that means that the pair becomes beginner friendly. Like you don't incur a lot of charges or commission while transacting. Yeah, that can be a simple meaning of spread. So you have to focus, as a beginner, you have to focus on these pairs: Euro USD, GBP USD, and USD Japan. So who participates in this Forex market? It's very important to understand who is in this market. Yeah, because in a market, we have to have traders, right? So we have institutions and government, whereby you have central banks, whereby you have, example is US Federal Reserve, Bank of England. So many people are saying Forex is a scam, but it's actually practiced by big institutions. So many people are just ignorant about the whole thing. So you have commercial and investment banks, multinational corporations that are paying overseas suppliers, institutional hedge funds, and asset managers. So on the other hand, we have retail and everyday players. So retail traders, it's me and you. We use a broker platform. You get. So since this is the introduction part, I would take it that someone is new, right? So a broker is a mediator between the buyer and the seller. We'll take it in that simple term. So this is the person in the middle. You have your amount of money, you want to buy something, he would mediate and take you right to the seller that you would need. So it's like a middleman, but we'll look at it more in the future videos. As I said, this is a series of 20 videos, and this is just video 1. So if you want to really understand all of this, you have to keep tabs of the following videos I'll be posting. So retail traders are also part of the traders, all the people involved in the market. So you have the import or export businesses that are converting their revenue, tourisms and travel exchanges. Since we said the simplest form of Forex is we're exchanging one currency for another. So, tourism and they're always in different countries. So they'll be prone to exchanging. So we have the online prop farm traders that are managing funded accounts. Yeah, we'll go into all of that, don't worry. So how does a Forex market actually work? So if you go long, that's a buy. You expect the currency to rise in value. So you buy something at a low price, expecting that when the price increases more than what you invested in, you would sell at a later price for a higher price to make profit. Yeah. Then an example here, as where you can see Euro USD at 1.10, 1.1000. So take it to that price. If it moves to 1050, that means that you've made a profit of 50. So you close the profit, you get. So going short, you expect the base currency to fall in value, you get. So for example, if you have a GBP USD, which is 1.2700, so if this price drops to 1.2650, you would close a profit. For a sale, you have to sell something at the highest price possible, for you to make money. So this is just the basics. Of course, later on we'll go into the chart analysis so that it will make more sense. But for now, we sell high and we buy low. This is like the gospel truth in this business. So unlike stocks, Forex, you can profit from both rising and falling markets. So in rising markets, we have to buy to make money. In falling markets, we have to sell. So this two-directional freedom is one of the Forex biggest advantage. So you can, if you have your skills, you can predict and make money on either way, whether it's crashing, whether it's buying, or going up, you're making money. So the 4 global trading sessions. So if you remember in the earlier slide, you said it's a 24-hour market. So it's divided into sessions, you get. So you have the Sydney session, whereby Sydney is in Australia, right? So that means that most pairs that start with the Australian currency would be the best to trade. Remember we said for a pair to be good to trade there, like it has to have many players or many people trading it at the moment. So in the Sydney session, which is 10 p.m. to 7 a.m. GMT, you change, actually, like you put maybe in Google and be able to see your local time, right? But this is standard. So you convert it to your local time. So in the Sydney session, AUD or Australian pairs and New Zealand pairs would be the most profitable to trade, because there are many people actually trading it. So the spreads or commissions to trade will be low. So actually the chances of you making money out of that market would be high. So we have the Sydney session, we have the Tokyo session that's rated to Japan, right? So you at this point you can see that Forex is actually making sense. So that means that all the Asian pairs, which is they end in JPY or start with JPY, they move well because This is Tocho session, and it's 12 a.m. to 9 a.m. GMT. So we have the London session, which is 8 a.m. to 5 p.m. GMT, and this is the most volatile. Yeah, it's the most volatile pair, whereby you have the euros and the GBPs dominate, because at this time the London working force has already started, right? Yeah, so there are many people that are trading, so it's the most volatile. Then we have the New York session, which would run from 1 p.m. to 10 p.m. GMT. It has high volume since there is a time overlap. So there will be a session, there will be a time in the day whereby the New York people are awake, or the people in the US are awake trading, and also the London people, like UK people, will also be active and trading. So there is that overlap. So meaning it will have very high volume. Yeah, so, and actually the best time to trade is London to New York overlap, which is 1 p.m. to 5 p.m. GMT, since it has the highest liquidity and tightest spreads. Yeah, sorry. So why choose Forex trading out of everything? Here we'll go through it. So you have the accessibility. You can start with as little as $100 on a live account, or you can actually do demo trading, which is a trial. They just give you a trial account. You just try on zero costs. If you're profitable, you have a system, which we'll later look into it. If you have your system that's really working, yeah, you can actually later shift on the live account. So on the live account, it starts as little as $100, and also some brokers would actually even allow you to deposit $10. So the starting capital is not an excuse. So there's leverage. You can control larger positions with a smaller deposit. So we'll cover that more in video 3. So you have to keep locked in. You have to keep on checking the channel. You have to subscribe and turn on your notifications so that we all grow in this journey in our Forex knowledge. So the liquidity, as I said, 7.5 trillion US dollars are traded in this market. That is an opportunity for you to make any amount of money you can think of. So it's 24/7 market, whereby, as we've said, sessions run from Sydney, there's Tokyo, there's London, there's New York. You actually have no excuse not to trade. 24/7, you just have to make your time that fits in your day. It's a two-way profit, whereby you can, if the market is rising, you can make money by buying. If it's falling or crashing, you can still make money by selling. So there's no central exchange. It is a decentralized global network with no single controlling body. Actually, to talk more on this, you can actually trade anywhere, on your phone, on your PC, anywhere, as long as you have an internet connection. So this is an important part of this video. So 70 to 80% of retail Forex traders lose money, not because Forex is a scam, but because they skip education. Let's take it to any business that you know. If you just go all in without any information, without knowing the people involved, without knowing how people actually make the money, you are bound to lose. That is why education is important, and that is one of the reasons as to why I'm taking time to make these videos, so that we get to learn, we get to experience the journey. Yeah, so just make sure you subscribe and comment anything you feel like, and we take on this journey of education more seriously. And yeah, at the end of the day, we need to equip ourselves with education. Yeah, so that's why this series exists. Let's make sure you are in the 20% by educating yourself. So now this is a 20 video roadmap to becoming a trader. So our first phase, it will focus on foundations and mindset, which is video 1 to video 5. Then we'll have a phase 2, which is technical analysis, whereby you'll be able to look into the charts and actually get that live application of the knowledge that you've been having. You get to practice and have certain strategies in mind that can help you make money. Then now we have phase 3, the risk management and the strategy. In that here, you have to control your money per trade idea. It's about protecting your capital. It's very important. Then phase 4 will have the execution and the growth, which will be videos 18 to 20, whereby now you are putting everything together so that you can attack the market and be able to make something out of the market. So at this moment, you are in the foundation phase. But as I said, just keep on watching, taking it one day at a time. Yeah, at the end of this 20 video series, it will all make sense. So what did you learn today? Key takeaways. You learned that Forex is the exchange of currencies, the world's largest financial market at 7.5 trillion US dollars traded per day. You trade in currency pairs, whereby you have your USD, GBP USD. Yeah, whereby on the left of every pair is the best, on the right of every pair is a code currency. You can profit going long or going short, which is buying or selling respectively. The market runs 24/7 across 4 global sessions. Yeah, whereby London to New York session overlap is the peak time for trading. Forex is accessible. So this masterclass will give you all of that, one video at a time. So you have to keep locked in. So let's take a peep into what we'll be looking at in the next video. So it is how to choose a Forex broker. And we also get to learn more about what a broker is. Yeah. So if this video really helped you, have to really subscribe so you don't miss the next lesson. You have to comment what part confuses the most, such that I can be able maybe to make another video on it. Yeah, or reach out, something like that. Yeah, so the full playlist will be linked in the description. Yeah, this is Dennis Bank Trades. Thank you for tuning in. Yeah, we'll meet in the next video.